Oh, it's that time again. Candle by candle analysis, one of my absolute favorite ways to analyze the market and practice becoming more and more every single day a better trader. That should be every goal, or everybody's goal in the trading industry, is being better every single day, even just a little bit. And when we're going candle by candle, this allows us to dissect the market and understand what it's doing, why it's doing it, or at least why we perceive that it's doing it. And then we can go from there and take that analysis and learn. Were we right? Were we wrong? How did things go? And that's how we can further our education while the markets are maybe closed or after hours, or even if we just want to review how the day went. Hey there. John Henry here, SSFTG. Welcome to the video. If this is your first time on the channel, welcome, my friend. I hope to earn your like and subscription today. Like I said, candle by candle analysis is one of my, if not easily my favorite way to analyze the markets and learn from it every single day. There's something new to be learned from this every day. But before we can jump in and kind of figure out what's happening here with this little inside gap up, inside gap up? Yeah, inside gap up. We have to do a little bit of a perspective check and see where are we, right? Where is this coming from? And if we look very far out, I mean, obviously this market hasn't stopped aside from a few little pullbacks here. It's been going straight up to the ceiling. So with this kind of rotational momentum to the upside, obviously the bulls are interested. And noting that we just had a nice little two-legged correction phase back and we're starting to open up into the new day with a gap up, basically completing the objective towards the highs, this is a very challenging location that we're going to be starting off in. We're basically at the top, and the market's going to have to work its way through here to prove that the bulls have enough to keep this thing going. Now, technically speaking, it is an inside gap up, right? So the inside gap up, if we look at yesterday's high, that is inside. Right? It's an inside gap up, so it does have a little bit of an air of weakness to it. It's not as strong as it could be if it were to break above the previous high of day. But looking at the first candle, not really helping the bulls at all. Nice gap to the upside. It's an inside gap up. Big bar. Really bad body, though. This thing's got some issues. All of the wick on the high and all of that wick showing up right at the previous high of day, that's a bit nerve-wracking. If bulls are trying to get this going, it's really tough to be a buyer right there. It makes more sense that buyers are going to want to buy a dip, a pullback, something. And, well, there wasn't much of a pullback there. I mean, look at this thing. Holy cow. We've got this thing just ripping up to the ceiling. Huge bull breakout. And if we look at this in comparison to the previous high of day, this is successfully breaking above. I don't think anybody's thinking, I don't know. I don't think that's a very good breakout, right? That's not the case. This is about as confirmed as you could possibly get. There are some issues in the fact that it's slamming directly into R1, but we have confirmed with the breakout of the previous high of day, and we knew that was resistance, that the bulls are trying to take charge. Knowing that that was resistance does make more sense to see buyers coming back on the dip. They don't want to buy up here if they don't have to, but they may feel pressured depending on how this continues. This is a really strong rally to the upside. And as quickly as it started, it stopped, right? We've got nice rotation to the upside in terms of bull bar, bear bar. Right into the R1, we're running into some issues or running out of steam, however you want to call it. We've got some open candle gapping to the upside, which is looking for possible continuation. This wick doesn't necessarily say that the bears are totally involved, and not really many bears are going to want to look at that and say, yeah, that's the one that I want to short today. So, I mean, to be fair, the bulls do have some context going on. But we're going to need a bit more proof. Like we were talking about before, they don't want to buy way up in the high. So going in underneath this bear bar would be a really nice opportunity for bulls to buy in on the cheap and then push the market right back up again and kind of loft it up. And that would reduce their overall risk as well. We do end up getting a nice little doji dip underneath, and the open candle gap that was here, well, that got closed. It not completely closed, to be fair. I mean, technically, it's still open, but I mean, for the most part, basically closed. This did rotate all the way back up, closed as a doji on the highs, still running into some issues here. A bull is going to have a hard time wanting to buy above that, noting the resistance, but to be fair, seeing all of this wick support, I mean, it's it's kind of hard to argue with them. Buyers have a really good bias. Maybe down here back in these lower portions are going to be the spot to pick up, just based on all of these wicks. Anywhere down in these previous wicks seems to be a zone of support, and we've got kind of like this open little box right here. That'll be kind of the zone of interest that seems to be buyers wanting to hold this in and kind of fill that volume up. Speaking of volume, if we add the volume profile to this, we can see that the POC got left behind way over here, suggesting that bears might have got stuck a little bit. And these big wicks that we're seeing really kind of further confirm that fear. Bulls might have a really good shot to try to take this higher. He says before another bear doji. I mean, okay, so this isn't the best looking candle in the world, but if we look at the overall rotation on this, we do have a new POC which is lifting higher. The market is failing to close below that POC, so it's obviously acting as a really nice zone of support. And look at the bodies on these. Or the lack thereof, completely non-existent bodies, literally on one of them. Compared to the bull bodies, these bears are proving nothing, right? They've got nothing going for them at the moment. We haven't had a breakout to the upside, but the buyers have at least had a chance to buy the dip. Buyers will be looking for a continuation above, especially if they can get above the R1, that'll help them out because then they'll be clearing above that resistance zone and it'll offer them up a little bit more space since we're basically going into highs. These dojis are friggin' killing me. Unbelievable. Stuck back on the R1 again. Still the same resistance. If we look at the POC, let's see if that changed. We'll go to the new candle here. And it did rotate up a little bit further. Once again, even with that new POC, they can't close underneath it. These candles look like absolute trash, not gonna lie. But, I mean, at least they're showing that the bulls have some strength. They are buying the dip big time. One thing that would shut this whole thing down would be a big bear bar down, basically displacing all of those bulls. That would be a problem. It would be back underneath the POC. It would be with a strong bearish continuation. There would be some issues with that. We don't have that. At the moment, the bulls are holding it above the POC, and the POC keeps going up, and they keep holding it above it. We got a lot of strength going on here behind the scenes. And there's the strength. Nice blow-off move to the upside. With this continuation, one big thing that they're gaining is a continuation above R1. We're breaking above that brick wall that they built. They finally punched their way through it and broke through. Now the POC, let's see if that's changed. We'll go up. POC is, no, it really hasn't. The bodies are still staying above it. The market is staying supportive. We've got nice bullish rallying going on. Realistically here, there's been almost no pullback at all. Buyers are going to want to buy any pullback they can get their hands on. Really, the only time we've even broken a previous candle's low was all wick, and it only happened once. Since then, it's gone straight up. Maybe down to the brick bottom candle here might be a beautiful zone of support to try to get a move going. Or it's an inside bull bar that gets pinned up to the ceiling. Very strong bullish momentum, though. It doesn't look like much, but this is confirming some bullish candle gapping to the upside. If the market wants to start running away, this means that we've got upward objectives that are still open, suggesting that the bulls have a bit more room to keep going. That also does show a zone of interest that buyers will want to buy into. There's a very distinct drop-off of volume here that the market may want to try to fill in. And going back to the POC wouldn't hurt my feelings, although doubtable that it'll make it there. If it does, that would be a beautiful spot of support to try to pick this back up. At the moment, just back underneath the previous inside bar's low, anywhere inside that blue box is a nice zone of support to keep it going up to fulfill the candle gap objective. It's still open, still waiting to get filled in. The bear bar is not really going to help us out a whole lot there. It's kind of unfortunate the way that it broke out above the highs there, starting to fail back. But notably, the candle gapping, still there. The objective is still there. Nothing has stopped the market from going up. And realistically, keep things in mind. Keep context in check. They've only broken below a previous candle once. Right. So, I mean, even if they do go under this bear bar, it's not really going to prove a whole lot. And knowing that bulls still have open objectives and bears are perpetually stuck on POC after POC after POC, seems like the sellers are in the juicer. And this looks like a very nice bear bar in a bad spot. That means that we also have the opportunity of a possible trap buyers buying that, knowing that it's a bad bear bar with open bull objectives, buying into those bears, looking for the rotation back up to finish the job. And that's a very common play. It actually even took place over here. It's just they had the R1. There were other contexts there that I don't know I'd be buying there. This makes a bit more sense. If they can trigger the bears in, this would be a really nice spot for a trap. Cool, man. Now that's the trap that we were looking at right there. So the market came down. They pushed into the blue zone, into that candle gap. That did squeeze the gap down a little bit, which means that we do have to recalculate the target. So let's recalculate the target real quick. That was off the doji to here. And that means that the target was right at the top. Are you kidding me? So as far as the pullback, they dipped into the blue box. The buyers supported it up as expected, kicked it all the way back up, and the candle closes smack on top of its target. Unbelievable amount of support that kicked in there. That's ridiculous. Now, we have completed the bull's objective to the upside. That doesn't mean that they have to stop going here, but let's see what the volume's doing with that most recent trap. Oh, we got another POC. Guess where the market closed? Right back above it. The bears tried closing under it once. Right there. And you got to get your goggles out to see that one. One tick under the POC, they were able to close under that and then reversed all the way back up to the highs. The sellers are getting squeezed so badly here, it's not even funny. I know we're talking about some pretty big targets here, but it wouldn't be a surprise at all to see several candles more to the upside while the bears continue to get squeezed. And really, so long as we keep holding this structural move to the upside and not breaking it by much, it's probably going to keep going. More bullish continuation, another strong bull bar. Holy cow. Bear bar starting to push down, challenging support now. Right now, look at this candle. Engulfing bear bar, so obviously quite a bit of back and forth here. But we're challenging the rising support. Even if we widen it out to this one, we're testing it here. Bulls bounce right back up. That's the kind of response that we want to see. Keep this thing going. We've got a doji. Okay, now this is the first time that the market's kind of closed underneath it. Look at the rally, right? Is this rally just going to stop and turn all the way back down? Probably not, right? More likely, this is going to go back up, at least double top, maybe continue grinding. More likely now begin transitioning into more of a sideways pattern. Instead of going straight up, now it starts doing this, where it starts grinding out a bit more. For bulls who are looking to ride out the bulk of the trend's probably closer to done than anything else. But it'll probably go sideways for a little while. Looking for objectives back up to the highs makes sense, as long as they don't break down too much further. Whoa, they came back down, retested the support zone. Big old wick. Starts reversing back up. This looks like this is about the time where the market's going to start transitioning into that sideways. Buyers are very obviously buying into the dip. I'm curious where that POC is. Ooh, now, okay, that's really interesting. They missed the POC at 44.89, and that means that sellers might still be stuck. They are building a lot of volume up on the top. Maybe they try to reject back down one more time here. Okay, we go on to the next candle, and the market's closing above the POC. They did shift the POC up, but now it's closing above it. So they're still suggesting that the market's wanting to rally higher. We do know that there is some possible weakness here, so this next move up is more likely going to have some difficulty. Seeing more wicks on the top of candles, seeing candles go sideways, more bear bar, bull bar, back and forth transitions, more dojis. That kind of stuff is a bit more expected up here because we've broken that aggression. Now that that's done, we more likely start transitioning sideways, he says, as a giant bull bar breaks the high. We get a bit more continuation up. Bear bar, okay. And now look at the size of these pullbacks. These pullbacks are happening much more aggressively. Back to the POC question mark. First time that they've been able to get back underneath the POC. If bulls were looking at this like, okay, I'm not going to get out yet, but let's kind of hang out and see. Well, okay, POC staying above, good rally, nice. Now we're closing below the POC. Again, this is a really strong rally to the upside, so saying that this is the top, yeah, good luck. Just like trying to pick the bottom, you usually get a handful of... that's how it works, right? The market doesn't just pivot from the top to the bottom more often than not. Sure, sometimes it does. That's called a V top or V bottom. We've all been there before. But more often than not, it goes sideways. It transitions. That's the normal market ebb and flow. These pullbacks are starting to get a bit wider, and it wouldn't be a surprise to see something like this where we had equidistant pullbacks starting to step up to the plate. We start getting a little bit closer to the low, getting a bit more support, starting to test back into the POC, back down again. We're seeing that the bulls just don't have the juice anymore, and sure enough, that's the current market, and we start dipping all the way back down again. So really, really interesting psychological structure that's going on there, but all of it kind of hinged on the fact that we broke the aggressors, they retested the highs, and failed. And after that, they've just been kind of giving up. Can't really say that I blame them, but this is why I go through the candle by candle psychology, because it's so important to understand what do I think the market's doing. And when I have an idea of what I think the market's doing, I can confirm or deny it. Was I right? Was I wrong? And what can I learn from that and grow from that as a trader? That's going to do it for this one, and hopefully it shows you again why I do these so often and why I find them so useful. If you have any questions, comments, topics for new videos, or anything else, drop them in the comments below. I always love hearing from you all. Until the next one, thanks for watching, and we'll see you in the next. Thanks.